Greetings. Welcome to BankBeat's Quick Takes video blog. I'm Tom Bengtson, publisher of BankBeat magazine. We're so glad you're with us today. I'm very pleased to welcome our guest, Cheryl Lawson, who is the Executive Vice President of Compliance Review for JMFA. Thank you for being with us, Cheryl.
Thank you so much. Glad to be here.
You know, compliance is such an important topic for banks all over the country. What can you tell us about how the challenges for compliance officers and the compliance team have changed recently?
Well, first off, they change all the time because the nature of the industry is we get a little smarter and we make a few mistakes and new regulations have to be put in place to make adjustments. And it's really different now than it was 5 or 10 or 20 years ago, when a compliance officer was able to really hone in on just 2 or 3 or 4 key areas. Now, every time a new service is offered, there's new regulations, and it just has become a much more complex environment for compliance officers. They do an amazing job, but the expectation is also very, very great. The amount of exams that occur a year have increased, the depth and complexity of those have increased, and it's a busy time. The good news is that there's a lot of experts in the industry. We don't have to depend on one person in the bank in the same way that we did 20 years ago. Instead, there are companies like JMFA that can provide leadership and support. So the compliance officers don't really have to be expert in everything. They can lean on partners to support them.
Sure. So let's talk specifically about overdraft services. What are some of the biggest challenges or complexities faced by community bankers in this area today?
Well, first I have to say that overdraft services is a really important solution for households. I mean, we're in business for customers to keep the doors open. We need our customers to see value in the services that we provide. And the overdraft services have become a very critical solution for a lot of families. And it's a needed service. I'm glad that it's been put into such high relief. That being said, financial institutions have a responsibility to deliver a strong program that's transparent and consumers understand and feel comfortable using, and that's fair. You know, we replaced a discriminatory solution where if I knew the banker, I'd get my overdraft paid, with a non-discriminatory solution that says, because I'm a customer, I have access to a few dollars that I can use, for a short-term facility. That's the kind of benefit that we've created in overdraft solutions. But in order to deliver them, we have to make sure that they're equitable, that they're non-discriminatory, and that they're well provided.
Talk about some of the disclosures that need to go along with a good compliance program around overdraft services. What are some of the common pitfalls that you see?
That's a great question, because really disclosures are at the heart and training of any good overdraft solution. Some of the pitfalls are frankly just inaccurate or incomplete disclosures. Banks have been hit because their Regulation E disclosures were modified and they were no longer compliant. And as a result, they may have been required to refund all the fees that they claimed for ATM and everyday debit charges. That's a simple thing to get right, but if you screw it up, it's a very costly mistake. And there are other areas in the overdraft space. We've become not so much a regulated, but now a litigated industry. There's a lot of lawsuits, a lot of claims that are being filed. Yesterday or 2 days ago, I saw the announcement that one of the largest credit unions in the country had to pay $16 million in a settlement. So it's just a burden to essentially make certain that you've done 100% of the disclosures 100% of the way. And so if the language around balance, or if the language around presentment, or if the issues associated with ATM versus non-ATM transactions are handled poorly, then it puts the institution at not just a regulatory risk, but also at a litigation risk.
And are you seeing increased scrutiny when it comes to compliance exams?
I am. It's funny about compliance exams. The examiners are kind of autonomous industry experts. They have responsibility to the agency that they work for, the FDIC or the OCC, but they're also experts in their own right. And so sometimes examiners can be overly critical or can be oblivious to a particular institution's overdraft solution. I say that because until recently, we've been more and more dependent upon the examiners to be the experts. And recently, the agencies came forward and said, listen, we're going to give you guidance, but we're not going to tell the examiners to use the guidance to beat you over the head. I think that the fact that they even had to come out with that kind of pronouncement indicates that as an industry, we were seeing examiners who were overly critical, and unfounded criticism was being levied against banks across the industry. So I'm glad to say that we see positive changes from the regulators. One of the things that's happening now is we're seeing so much change because of the leadership change. When Biden took office, all of the agencies and the leadership of the agencies is sort of in flux. That's an opportunity for what I think is probably some positive improvements in how overdrafts and other bank practices have been managed.
I was going to ask you about that, but you've anticipated my question. But I'm wondering if, with the change in leadership in Washington, D.C., are you hearing some things that encourage you about banks being able to offer this kind of service? Or are you hearing things which make you a little nervous about the future?
That's a really good question, and one that a lot of our prospects ask us. The answer to it is, I think that the industry is sound. There's been always the speculation that, oh, one day they'll stop allowing us to have overdrafts. But I'm reminded by our compliance attorney in Washington that the United States of America has overdrafts every day. They're not going to stop allowing us to have overdrafts.
Yeah.
If they have to regulate us, if they have to monitor or modify, I believe that what they'll do is to do things that are sensible. So far, in over 20 years, they've not done anything except the final guidance and a couple of regulations. I think that's an indication that sensibility implies, leave it alone, it's not broken.
Okay, well, I think a lot of people would be pleased to hear that and hope that that's in fact the case. But what would you tell community bankers about the best things they can do to safeguard themselves from compliance issues, compliance litigation around overdraft services?
Well, obviously, I work for a consulting company, and I believe that you should have a strong partner. There are a lot of experts in the industry. There are a lot of people inside the banks that know a lot. But if you don't spend all day, every day working on overdraft services, you can miss some things, and those things can become high risk or costly. So the first thing I would say is every financial institution should consider investing in a partner who can become their eyes and ears on the ground to really help them make a strong overdraft solution. That being said, every institution has some sort of an overdraft solution in place anyway. They pay some items. It might just be the wife of the board members, but they cover some items. And so whenever you're in that business, you have to be able to make sure that it's not only consistent, but it's also something that's being delivered fairly. The issue of equity and parity is so central because it literally touches on most of our regulations. We have to make sure that we're not harming citizens at the same time that we're providing critical services. And then on top of that, what I would say is for any institution, they have to not only sit in the office as the banker, but also sit on the other side of the desk as the customer. How do we educate them? How do we prepare them? What alternatives are they given so that they don't have to have an overdraft fee solution? Maybe they can use their savings account and transfer monies at a much lower cost. Those strategies enable the institution to not only do a good job, but also feel comfortable that what they're doing is right for their marketplace. And at the end of the day, we keep the doors of the bank open because we're serving customers in a way that they want to be served. This is an industry that we've seen as a solid rock, as all of the other industries during this last year or so of COVID has been solid. Banks have not suffered greatly. I mean, we've all lost revenue, but the doors have not closed. We've not seen them like restaurants and businesses that have shut down. And I attribute that to the fact that we are ultimately holding these communities up. And I believe that overdraft services is one of the ways in which we've been able to do that. So as bankers will sometimes say, well, hey, Cheryl, the stimulus money, it's making it really hard for me to make revenue on overdrafts. My answer is that's true, but right now we're going through a national crisis. It will end, and we'll get back to business as usual. And that's when an overdraft service is going to be even more important than it's ever been before.
And I'm sure a lot of people are looking forward to getting back to business as usual. Yeah. But now, if a bank has an overdraft program in place now, what are your thoughts about how often that program ought to be reviewed? Or are there triggers or clues that bankers should be watching out for that tell them, hey, I should really look at this a little bit closer right now?
It's a good question. I suggest at least annually. And I suggest that as things change, it constantly be looked at. So with our clients, we support financial institutions across the country. And let's say that a lawsuit hits the newspaper, like I mentioned one that occurred a few days ago. When that happens, the very first thing that we do is go back and look and see, are we at risk in any way? Is there anything in that case that might also apply for my institution? And where necessary, make changes. The reason that JMFA has been so successful over our long history is because we do that all the time. And so when things change in the industry, whether it's because of exams, I have hundreds of clients that are receiving exams all the time, so I get feedback on what examiners are doing, or litigation, or regulation. I'm able then to go back and look and see at everything that we provide to our clients and make sure that it's still completely perfect, 100% compliant. We give our clients a compliance guarantee, which means that in the event that we tell them to do something, let's say we have a disclosure around the definition of available balance, and they get an examiner who says that that's wrong and they've done something that they shouldn't have done. JMFA is on the horn for that penalty. We're responsible because what we make sure of is that every single document and every single customer-facing disclosure is 100% compliant all the time. And a regular review, not just of our materials, but also of the landscape, helps us to honor and to ensure that that compliance guarantee is enforced. And the good news is that in all my years of being at JMFA, and I'm coming up on 20 years, we've never had to pay on that compliance guarantee because we've always done everything 100% right. So although I won't say that tomorrow we may not make a mistake, we haven't so far. And so I can testify to the fact that what we've demonstrated is strong review, consistent oversight, and effective management has ensured that our clients have benefited from a well-run program and they've not had any of those criticisms.
What would be your thoughts for bankers with respect to how they should plan in order to be successful with an overdraft protection program? Are there things that they can be thinking about which give them a greater likelihood of success with this service, than if they don't think about it?
I think absolutely. First, think about what is it that the customer needs? How do I serve my customer? How many dollars is going to make a difference in their household if they had to have an overdraft? Would $300 be enough or more? I'd also ask the question, how do I want to manage that? We believe that the conversations that we have with customers are not one-time conversations. Hey, here's your limit, good luck. But instead are ongoing conversations. So every time a consumer has an overdraft, we interact with them. That's a letter, or that's a call, there's communication. So that over time, we create an educated consumer who knows well how to use the program. It doesn't create for them additional hardship. I think that bankers should be thinking about what kind of relationship with my customers do I really want to have? Am I a provider of critical services? Do they see me as a partner? And if so, how do I make that work? When thinking about an overdraft program, at the center of it all is compliance. And so any investment, any plan, any strategy has to first ask, how can I make sure that my program is going to be 100% compliant? How can I make sure that when my examiners come in and say, show me your overdraft program, that I'm not going to get beat up or dinged? Those things are at the heart of a well-run program, is a partner who knows what to do and a series of disclosures and constant reviews to make sure that no mistakes slip in.
Well, Cheryl, this has just been so informative. I really appreciate your responses. This is a very important topic. I do think that the pandemic in the last year has brought overdraft services, made it a little bit more important to get this right. It's been kind of an unusual time, sort of difficult for a lot of bankers to communicate with their customers, as normal. So this has been a very important time for this service. Do you have any other thoughts that you'd like to share? We're reaching community bankers across the country with this video, and we've got just about another 30 seconds or so that we can share.
Absolutely. Well, the one thing that I would say that I haven't is JMFA has been in business nearly 40 years. Our staff is all bankers. That's where we came from. And our expertise is just in the overdraft space, which means we're a great partner to bring on board to help you evaluate or improve a program if you have one. And ultimately, we're in the business to make banks stronger through well-run, well-managed overdraft solutions.
Well, Cheryl Lawson, thank you very much. Cheryl has been our guest. She's the Executive Vice President of Compliance Review for JMFA. Again, my name is Tom Bengtson. I'm publisher of BankBeat magazine. This has been another BankBeat Quick Takes video blog.